Hi dear traders! Just when you think there will be no more surprises in the crypto industry, something happens again. For example, Bitcoin surges by more than 8% in 24 hours, or Binance reaches an agreement with the US regulator to avoid a total asset freeze. Digital assets seem to be in demand again. Hello and welcome to our weekly review of the crypto market. The cryptocurrency market is currently enjoying a surge in prices. In fact, traditional financial organizations are getting increasingly interested in digital assets. Thus, Deutsche Bank, one of the world's largest lenders, has requested a license for storing crypto. In addition, the EDX Markets crypto exchange launched this week. It is aimed at serving investors interested in digital assets but fearing regulatory issues. The exchange does not directly provide services to retail investors. It will interact with them through brokerage firms that will be representing the interests of their clients. The flagship cryptocurrency surged after the launch of a new crypto exchange where users can trade Bitcoin, Litecoin, and Ethereum. The number one coin immediately broke above $30,600. All in all, the past 7 days were quite good for Bitcoin. The digital asset has been bullish since June 15th. From a low of $25,000 per coin, Bitcoin swelled to $30,015 on Wednesday. It remains to be seen whether the rally continues. On the one hand, the flagship cryptocurrency fell after the dovish decision of the US Federal Reserve. At the same time, the US regulator's tight grip on the crypto industry did not affect Bitcoin, and it strengthened against other digital assets. The US Securities and Exchange Commission considers Bitcoin as commodity. Therefore, the current rally in the crypto market will be concentrated on that. Moreover, a bearish correction of the premier crypto seems to be over now. If growth extends, Bitcoin may hit 2023 highs. Taking into account Bitcoin's reaction to the Federal Reserve's rate decision, the fall that came after Jerome Powell's testimony on June 21st puts it all into perspective. The Fed chair told the US Congress that the regulator still considered hiking rates further. Powell warned that getting inflation back down to 2% has a long way to go. Therefore, a pause in tightening will likely be brief. He also said that the Federal Reserve will be discussing the timing of rate changes at every meeting. Given how far we've come, it may make sense to move rates higher, but to do so at a more moderate pace, Powell said. Earlier in the process, speed was very important. It's not very important now. The Fed chief did not reveal any clear plans for hiking rates in the future. In this light, the US dollar index fell by almost half a percentage point yesterday, approaching the lowest level since May 11th. The US dollar index closed at 102 on Wednesday, showing weakness against most majors. And among major cryptocurrencies, Ripple suffered the biggest losses of the past week. It dropped by about 4% in 7 days. The head of the company, Brad Garlinghouse, believes that Ripple's legal battle with the Securities and Exchange Commission is coming to an end. However, it was not the first time such statements were made by representatives of the crypto project. In November 2021, Brad Garlinghouse predicted that the legal battle would be resolved as early as 2022. Now it's the middle of 2023. While XRP has previously risen in response to such statements, this time the optimism on the head of Ripple has had the opposite effect. The token dipped below $0.46 just before the weekend. However, XRP recovered slightly amid a broader upward trend, closing at 0.50 late on Wednesday. According to Brad Garlinghouse, a settlement would only be the beginning of a fight. The Securities and Exchange Commission is expected to provide transparent regulations for the crypto industry. However, the regulator does not appear to be in a hurry to take a stand. For example, the Commission took an additional 120 days to prepare a response to Coinbase's requests regarding cryptocurrency regulation. The regulator's actions have already caused an exodus of crypto companies from the United States. Surprisingly, the main positive crypto news of the past week was also related to the Securities and Exchange Commission. The American international investment company BlackRock submitted an application for a spot Bitcoin exchange-traded fund. As the world's largest asset management company, BlackRock has a 575-to-1 success rate in ETF applications. This has given many market participants hope that one of the global financial titans would receive regulatory approval for this project as well. Many companies have tried to register a physical Bitcoin ETF over the past several years. About a decade ago, Cameron and Tyler Winklevoss filed an application for the Winklevoss Bitcoin Trust. Fidelity, WisdomTree, and VanEck have also tried to launch such a product. All previous applications were rejected by the Commission, and Grayscale is now even suing the Commission. It wasn't until October 2021 that the regulator approved the ProShares Bitcoin Strategy Fund. It was a major victory at the time, and the fund quickly accumulated $1 billion in assets within days. Now the cryptocurrency is trading far below its 2021 highs. However, the very fact that BlackRock's name appears in the Securities and Exchange Commission filing is seen by many as a signal of the growing mainstream acceptance of the cryptocurrency sector, and that is certainly a very positive trend. Meanwhile, Ethereum has not displayed a great performance over the past 7 days. On Thursday, June 15th, it fell alongside Bitcoin. As a result, the second cryptocurrency lost almost 7%, reaching $1,627. This was the market's reaction to the Federal Reserve's monetary policy decision. Subsequently, Ethereum recovered to the initial level of 1,895. Ethereum withdrawals by long-term holders played a decisive role in the correction. This could potentially be a negative factor for the second largest cryptocurrency by market capitalization, as it resembles the beginning of a network-wide Ethereum sell-off. Meanwhile, new malware was detected online that can steal crypto assets from wallets of users. The new virus was integrated in several pirate software releases that can be found on torrent trackers. We hope your crypto wallets are well protected. This was the weekly review of the crypto market. See you next week.